when you talk about just how big this could actually be, and you look at the fact that in Shanghai, silver is priced over $3 an ounce higher than it is in the West. They know the real value of silver. It will even be priced higher before this is all said and done. They're just slowly arbitraging everything over. Silver's priced $3 higher. The Shanghai Exchange opens up limit up today. They now have a new trading platform that sidesteps SWIFT that allows these. I mean, it's all coming into place. The infrastructure is being built right. I think that countries like China, countries like Russia, countries like India that understand this will be in the driver's seat before this is all said and done. And this is why you're seeing the price Monday last night in China, because they're ahead of us time-wise. The Shanghai silver futures market hit a 7% limit up stop Monday morning today. Wow. Right away. So, maybe that had a profound effect on the way that they decided to look at silver. Look, silver was up 10% last week alone, but it opened up this morning in Shanghai up 7% limit and triggered the stops for a few minutes. So yeah, and when you talk about the Belt Road Initiative, it's not a small project. It's the largest infrastructure project in human history. It's 75.
In the realm of silver trading, Andy Schectman, CEO of Miles Franklin, sheds light on recent developments and their potential implications for the global economy. He points out a remarkable surge observed in the Shanghai silver futures market, despite it being Monday night in China. This surge, a significant 7% increase, signals a notable uptake in silver prices. Schectman attributes this surge to ongoing events related to China's Belt and Road Initiative (BRI).
And the Chinese government have launched a new public blockchain infrastructure platform, and the platform is called Ultra Large Scale Blockchain Infrastructure Platform for the Belt Road Initiative. It aims to offer an underlying public blockchain for cross-border applications, according to an April 1st post by the Confluence Network. The main focus of the project is to create a public blockchain infrastructure platform. The platform will be able to support the implementation of cross-border cooperation projects along the Belt and Road Initiative. So when you talk about just how big this could actually be, and you look at the fact that in Shanghai, silver is priced over $3 an ounce higher than it is in the West. They know the real value of silver. It will even be priced higher before this is all said and done. They're just slowly arbitraging everything over. So silver's priced $3 higher. The Shanghai Exchange opens up limit up today. They now have a new trading platform that sidesteps SWIFT that allows these. I mean, it's all coming into place. The infrastructure is being built right in front of us. And that's probably part of the reason, too, in terms of silver's really strategic use that you have. I don't know how many companies in Canada and think tanks and groups that have petitioned the Canadian government to relabel silver from industrial to strategic, because you're right, it is strategic and it's disappearing. And without it, you know what you are. You're up a river without a paddle. This is the same brain dead lady who had, while in Russia's backyard, and I say that euphemistically, in Brazil, part of the BRICS, one of the charter members, to publicly saying we need to not only sanction these Russian assets, but to confiscate the $380 billion in Forex reserves and give them to the Ukrainian effort. So, I don't know why anyone would listen to her. And not only that, she was a horrible Fed chairman or chairwoman or chairperson, and equally as bad and inept as a Treasury secretary. And I just think that, that's probably why it opened up 7% limit up. They laugh at her and say, you guys, you're crazy. The things that the West is trying to do, I think, is being laughed and mocked at and ridiculed. And that's why you see a country like India, part of the BRICS, import in the last 2 years over 400 million ounces of silver. And isn't it ironic that that's almost about the same amount of silver we've seen bled off of COMEX in the last 2 years? So you start to put these things together and you realize that Zoltan Pozsar is right. We're moving into a system where it's all about commodities, and he or she who has the commodities will make the rules. And that's why I think that countries like China, countries like Russia, countries like India that understand this will be in the driver's seat before this is all said and done. And this is why you're seeing the price setting mechanism.
The Belt and Road Initiative is an extensive global infrastructure development strategy aimed at bolstering connectivity between continents through the establishment of extensive trade routes. An integral aspect of this initiative is the introduction of an ultra-large-scale blockchain infrastructure platform intended to support various projects along the Belt and Road. This underscores China's dedication to technological innovation and enhancing its global infrastructure capabilities. One striking observation is the disparity in silver prices between Shanghai and Western markets, with silver priced over $3 higher in Shanghai. This discrepancy underscores the growing significance of silver, particularly in industrial applications. The higher prices witnessed in Shanghai highlight the strategic importance of silver and the urgent need to address its scarcity to foster growth and development across various industries. Concerns are raised about the availability of silver for industrial purposes, with much of the available silver tied up in ETFs and warehouses, limiting its accessibility. Schectman critiques Janet Yellen's efforts to influence silver production, emphasizing the disconnect between claims of sufficient availability and the practical challenges of accessing it. He questions Yellen's effectiveness as Treasury Secretary, given her track record and the evolving dynamics of global economics.
The point I'm getting at is that the world understands the importance of pulling all of these commodities off of the exchanges by, draining the exchanges, using the BS Western price and sucking it all over there with arbitrage, and bang, like that, they're going to flip the switch. They will own all of the commodities and they will reprice it on exchanges that are cash and carry rather than our fake leverage, like where you say they can put the silver wherever they want with a click of a mouse. We talk about the things that you are doing so important for humanity, people to listen to. You have to have a bigger mind. You can't just look at today, next week, or what happened last week. You have to see the big picture. And that big picture is beginning to obviously rapidly unfold. But yeah, I think you're definitely going to see silver be viewed, before this is all said and done, not as an industrial metal, more as a strategic metal. And the need for solar panels, screw that. It's more about the need for it everywhere. And all of the uses that you've done an amazing job of telling us where we need silver. And it's disappearing in nature. And unfortunately, the West is the only entity that doesn't realize that. The rest of the world is beginning to notice that. But last night, Sunday night, 6 p.m. Eastern, I look gold down 15, 20 bucks, silver down 50 cents. And I turn 5 minutes later, I look at it and it's way up. And the point is that something's different. And maybe the West has lost control. And maybe when they accumulate all of the real things, like they have, not just the paper side of things, but the real things, messing with shorting and especially naked shorting in a market like this really is about as dumb as a mud wall. So yeah, I think maybe it's different this time. Who knows? But
I guess so.
We are at that point where I think we should expect a pullback, but I guess we'll have to wait and see.
Schectman highlights the evolving perception of silver from solely an industrial metal to a strategic one. Demand for silver is expanding beyond traditional uses like solar panels, with Bloomberg estimating that by 2030, solar panels will consume about 20% of total silver demand. Despite the rising demand for solar energy, the supply of silver has not risen in recent years, underscoring the need to address silver scarcity. Furthermore, Schectman discusses the importance of withdrawing commodities from exchanges and redirecting them through arbitrage. This strategic approach aims to shift ownership away from leveraged exchanges towards entities prioritizing tangible assets, thus reducing reliance on artificial mechanisms. He emphasizes the significance of seeing the bigger picture beyond short-term fluctuations and understanding the evolving dynamics of the global economy. The recent surge in silver prices, reaching levels not seen since December 1979, highlights the extent of price manipulation by Wall Street banks. Despite attempts to artificially keep silver prices low, strategic moves by major players like China, Russia, and India indicate an imminent shift in the global economic landscape. These nations are expected to cement their roles in commodity markets, signaling significant power shifts within the global economy. Schectman's prediction suggests a fundamental shift towards prioritizing commodities with implications for the global economic order. He speculates on the possibility of the West losing control over commodity markets as other nations accumulate tangible assets. The increasing scrutiny on market manipulation tactics, particularly in the silver market, further supports this notion. In conclusion, Schectman's insights shed light on the complex interplay between global economic forces and commodity markets, particularly in the context of silver trading. The observations made regarding the Shanghai silver futures market, the Belt and Road Initiative, and the evolving perception of silver underscore the need for a strategic approach to address silver scarcity and ensure its availability for critical industrial applications. The anticipated power shifts within the global economy, driven by countries like China, Russia, and India, further emphasize the need for a nuanced understanding of commodity markets and their implications for the broader economic landscape. If you enjoyed this breakdown, hit that like button and subscribe for more videos like this. In the comments below, let me know what other questions you have about gold or other precious metals.